There has been a great deal of noise in the stock market recently, in particular within the financial sector. And this has been because of the recent collapse of Silicon Valley Bank. In today's video, I wanted to touch on a few different things. What's actually happened, why it's happened, and what does this mean for the UK, and also what does it mean for investors? Because I know a lot of you right now are probably panicking. Now, I'm sure a lot of you that watch this channel and a lot of you that are watching this video are interested in investing already and probably in the global financial situation as a whole. So you've probably already heard about the collapse of Silicon Valley Bank. But what's actually happened for those who maybe aren't so familiar or just want extra information? Well, Silicon Valley Bank, I'm going to start saying SVB from now on in this video because it's a mouthful, officially collapsed last Friday, causing the federal government to actually step in. SVB had actually become the 16th largest bank in the US over its 40-year lifespan, and it's been the largest collapse since the 2008 financial crisis. And this, of course, has been spreading fear that potentially there may be a very large banking crisis coming around, or that this could spread outside of the US and actually lead on to a global financial crisis. This all happened relatively quickly, actually. There were only 48 hours between the point that Silicon Valley Bank announced that they were trying to raise $2.5 billion to repair a hole in their balance sheet and the announcement that they had collapsed. So what is Silicon Valley Bank? Because I want to say right now, and we'll get onto this a little bit later, they're not the typical bank. They're not like some of the other big banks that you know. And we will get onto that and why that's important for the future of the banking sector, etc., etc. But just to put it out there, Silicon Valley Bank was kind of like the go-to for the innovation economy. So think of your tech companies, your startup companies, your venture capital backed companies. Businesses like that would turn to Silicon Valley Bank. So what I'm trying to point out here is that they didn't typically have their retail customers. They had this select type of customer, and that's important. They were headquartered in California, but they started to expand globally with their first non-US branch actually being opened in Shoreditch in London. Again, that's why UK investors and the UK in general care about what's going on right now. One, because actually, they are here too in the UK. But two, obviously, we've seen times in the past where a bank has collapsed and that has had a really large knock-on effect to the economy. So people are a little bit apprehensive about this. So what actually caused the collapse of this bank? They were hit pretty hard when the tech stocks started falling in value last year, which I'm sure you, like me, saw reflected in your own portfolio. And it was this paired with the Federal Reserve's aggressive plan to increase interest rates to combat inflation that was just not good for them. They bought billions of dollars worth of bonds over the last couple of years using customers' deposits. And this is usually a pretty safe thing to do. But the value of those investments actually fell because they were paying a lower interest rate than what a bond would pay if it was issued today in the higher interest rate environment. So how a bank usually makes money is pretty standard. They take our money, the deposits, and then they go and invest that money, and the return that they get on that is their profit. And at the time, US treasuries were very low. But then, of course, the Fed started raising interest rates to combat inflation, and this just meant that the value of these investments, the bonds, went down. They became devalued. And typically speaking, this is not an issue, right? Because many banks around the world are doing the same thing, but they haven't collapsed like we've seen with Silicon Valley Bank. And this is because banks would hold these bonds, these investments, over a long period of time. We know as investors that sometimes our portfolio goes down, but if we hold it for a long period, it can ride out those market dips. That's the whole point of being a long-term investor, because we hope that in due course, our investment will go up again. But here's the problem. Their customers were not typical customers, like I was saying. They were largely tech companies and other startups. And these types of companies were starting to struggle to get extra funding. So they began withdrawing their money from Silicon Valley Bank. And this meant that the bank then had to start selling their own assets in order to actually give their customers the money that they were withdrawing. And this actually required them to start selling their investments, their bonds, at a loss. They were losing money. And this effectively caused them to become insolvent. And because these Silicon Valley Bank customers weren't the normal retail customers and they were instead these wealthy businesses, they were much more fearful of a bank failure because their deposits were typically over $250,000, which is the government imposed limit on deposit insurance. Anyway, SVB then tried to raise additional capital to help this situation, but they were unable to do so. And then they were brought down by a run on the bank. A bank run or a run on the bank just basically means that loads of customers are trying to withdraw their money at the same time because they believe that the bank's going to collapse or whatever is the reason. They worry and they withdraw all of their money, and the bank can't keep up with that, and it just ends up being a bank run. And then the bank regulators pretty much had no other option than to seize Silicon Valley Bank's assets in order to protect any asset and deposits left at the bank. And this is a really difficult situation for a lot of businesses because it's already caused like $150 billion or something around that sort of sum in deposits to now be locked up, which basically means that these companies won't be able to get hold of their money for what could be quite a long time. So let's move on to how this relates to the UK. You may have also heard that HSBC, which is a massive global bank that you have definitely heard of, has actually acquired the UK branch of SVB for £1. And this happened through a private sale actually facilitated by the government and the Bank of England. Silicon Valley Bank UK actually has over 3,000 UK clients, including many tech and science startups. And it's been said that these businesses will be able to carry on as normal and access their money as they normally would. So Silicon Valley Bank UK has around £6.7 billion of deposits and loans of about £5.5 billion. That was as of last Friday. And this is according to the Bank of England. So this move, HSBC acquiring the UK side of Silicon Valley Bank, has actually probably saved loads and loads of tech startups. And I think with this and with HSBC being such a trusted, well-known name, it's brought a side of safety to many UK businesses that were probably pretty fearful when they started hearing about what was happening in the US. Since this acquisition of HSBC purchasing this bit of Silicon Valley Bank for £1, we have seen a dramatic fall in HSBC's stock price, as you can see here. And you might be wondering, why on earth would HSBC actually be interested in purchasing this bank? The CEO of HSBC has said this acquisition makes excellent strategic sense for our business in the UK. It strengthens our commercial banking franchise and enhances our ability to serve innovative and fast-growing firms, including in the technology and life science sectors in the UK and internationally. So I don't think HSBC has just come in as a hero. There is something in it for them. They see the potential and it could potentially be a very, very good deal that they've made. So what's the impact on investors? I've seen a lot of people really worrying, and that's typically what happens because of this sort of situation. It panics a lot of people. But I've also seen the other side of it. I've been speaking to the Patreon members on my Discord, and a lot of them have been saying that they're seeing this as an opportunity. They're sticking to their strategy and they're purchasing some more stocks at a discount, which I absolutely love to see. But understandably, this news has put fear into many investors. And it's raised a lot of questions about whether we're heading into another financial crisis. I think in the short term, we can expect to see this market noise being reflected in the stock market. We're going to see, and we're already seeing, a lot of the financial sectors and the bank stocks falling. That is no surprise. We're also going to see the indices falling as a whole because banking sectors take up a large portion of those indices, and that's obviously going to be reflected there. But also, I think we're going to see some fall in tech stocks as well. So far, we've been seeing banking stocks in the UK, in the US, in Asia, just globally tanking. And that's no surprise, like I said. I think there's now some fear that smaller banks could start falling too alongside the big banks. I know in the US, the likes of Citigroup, Bank of America, Wells Fargo, they're all down by quite a big percentage at the moment. And we've seen a similar thing here in the UK with the bank stocks listed on the FTSE 100. We've seen falls in Barclays, we've seen falls in HSBC, especially HSBC since investors are starting to worry what the acquisition of Silicon Valley Bank actually means for that company and for that stock in the future. I think that the situation that we've seen with Silicon Valley Bank collapsing is not a situation that we should expect to see with all of the banks and the financial sector globally. I think it was quite niche what happened here. And they are a very different, they're not a normal bank. They're a very different type of bank than, us as retail bankers are used to seeing. I think the main concern here is that customers start withdrawing money from their banks as a way to mitigate against the worry that this could happen to their bank like it did with Silicon Valley. But yeah, I don't think other banks, the big banks, are particularly at risk. They're definitely not at the same level of risk and exposed in the same way as Silicon Valley Bank was. And although other banks also do have this unrealized loss in their bond portfolios, like Silicon Valley Bank did, due to the rise in interest rates, Silicon Valley Bank was a niche example. It was very unique because most of its depositors were businesses. And also, most of the deposits were actually over that 250,000 coverage limit. And a lot of other banks don't actually have their money in these startup companies. So all of these factors combined make it unlikely that other banks will now follow in the same footsteps. Obviously, nothing's guaranteed. This is not financial advice in any way. I'm just sharing my opinions. Interestingly, right now, this whole noise is causing gold to become very popular. Bullion Vault actually reported that new account openings have tripled since Sunday, hitting the highest in just over a year, which has of course driven the gold prices higher and higher. So I think what's happening here is people are getting fearful. People are turning away from traditional equity and stock investing and maybe turning more towards gold because they think it's a bit of a safer bet right now. I personally think there could be some opportunity here. If you're a dividend investor especially and you have lots of these financial stocks in your portfolio, then obviously take time to look to see if you think the stocks are very good quality stocks, their balance sheets add up, etc., etc. But this could just be an opportunity to load up on some more for a discount whilst they're dropping. Same goes with other companies that also are going down right now and indices as a whole. This current sell-off and chaos that is happening could just be a buy opportunity. I hope this video has at least calmed you down a little bit if you were starting to get a bit panicked and a bit fearful. I know it's really, really hard when the news is telling you all these things and you're panicking and you see your portfolio going down. It is really hard to stay on track. But just try and be focused on your strategy and have conviction where you need conviction. I recently did a poll a few hours ago actually on my channel asking people how they felt about this. And 25% of people that voted said that they were quite concerned. But 22% said they feel absolutely fine. And 54% said they feel fine and they view it as a buying opportunity. And like I said, that's how the members on the Discord channel that I have are feeling as well. So I hope that gives you some reassurance. Let me know any questions you have, any thoughts you have about this. And yeah, if you want to check out the Patreon and get access to the Discord, link is in the description below. Thank you so much for watching and I'll see you again in another video.